name is John Griffith. I'm the Chief Development Officer at Gold Royalty Corp. And I just wanted to express my gratitude to Red Cloud for including Gold Royalty in the Mining Showcase Conference. And thank you all, importantly, for being part of the conversation today about Gold Royalty. Before I continue, obviously would like to draw your attention to the disclaimer and also the associated cautionary statements, and this can also be found on our website. With gold prices recently reaching all-time highs and the prospect for prices to stay elevated given the robust political and economic uncertainty, and central banks holding more gold than U.S. treasuries for the first time since the mid-70s, I don't think I need to tell this audience that it's a great time to be investing in gold equities. With this backdrop, Gold Royalty's catalyst-rich portfolio of over 250 assets significantly weighted to gold and offering peer-leading, low-risk, organic growth represents the ideal vehicle to gain leveraged exposure to gold. I should highlight here that our 5-year growth is comprised of assets which are, for the most part, already permitted and built, significantly reducing the execution risk. Our assets are fully paid for, with no additional capital calls or milestone payments, resulting in Gold Royalty offering no capital cost inflation risk. Most of our assets are NSR royalties, which are calculated on net revenue, thereby significantly limiting operating cost exposure and inflation risk. Together, these characteristics result in higher gold prices directly impacting the bottom line, offering unmitigated exposure to the gold price. It's worth taking a step back and reviewing the path we've taken to build this exciting portfolio of over 250 assets. We went public on the NYSE American Exchange just under 5 years ago. With a strong currency, we immediately proceeded to acquire Ely royalties and then subsequently acquired Golden Valley and Abitibi royalties in the same calendar year, starting off a much-needed round of consolidation. And beyond M&A, we have a multi-pronged approach to growing our underlying net asset value. This multi-pronged approach has 4 distinct pillars. As mentioned, we're active in the M&A market, and since we made our 3 acquisitions in 2021, there have been at least 9 other change of control transactions in the sector. We also acquire third-party royalties, for example, Cote Lake and Granite Creek. And we provide development capital for new operations, such as Borborema. And finally, we generate royalties organically through our royalty generation model focused in Nevada and also in Quebec and Ontario. Approximately 30% of the royalties in our portfolio have been created through this model, which is also a profit center as we earn revenue while the operators spend the exploration dollars and we don't have any associated costs. Combined, these 4 pillars of growth have resulted in our initial portfolio increasing approximately 14-fold. And importantly, we now have 7 cash-flowing assets that have reached the all-important inflection point of being free cash flow positive. Our portfolio is underwritten by many world-class assets located in key low-risk jurisdictions and heavily weighted to gold. About 90% of the portfolio is gold with a copper power play kicker. The balance of the assets across producing, developing, and the longer-term exploration assets drive near, medium, and long-term leverage to gold. And more than 85% by value of the assets are in Canada and the US. We've grown quickly and meaningfully, but we've also built our business on solid foundations. A clear differentiating feature of our company is the fact that we have royalties over 3 of the 5 largest gold mines in the USA and Canada, being Odyssey, Côté, and Ren, part of Goldstrike, which are all operated by world-class, well-capitalized companies and will produce gold for many decades. I should also note that several assets have recently changed hands, leading to a renewed focus, resulting in prioritization and optimization under their new ownership. Borden, which was part of the Porcupine complex, was recently sold by Newmont to Discovery Metals, and DPM, previously Dundee Precious Metals, recently acquired Adriatic Metals, whose core asset is the polymetallic Vareš mine in Bosnia and Herzegovina. When fully ramped up, Vareš will be a top 10 silver mine globally. Our portfolio benefits from being heavily weighted in some of the best mining jurisdictions in the world as measured by the Fraser Institute, considering such factors as access to skilled labor, permitting, rule of law, and geological prospectivity. As you can see, Gold Royalty ranks second only to OR Royalties based upon an index published by the Fraser Institute focusing on producing assets. We expect significant growth over the next 5 years, with production expected to increase at least 4-fold from 2024 actual levels to the midpoint of our 2029 guidance. I want to emphasize that this growth is low risk given the low level of execution risk, with over 80% of the growth out to 2029 coming from assets which are already permitted and built, at least to the first phase. Also, our portfolio is fully paid for, and we have 0 capital calls or future milestone payments. Most of these operations are in low-risk global mining jurisdictions, and the assets are all in the hands of experienced and well-capitalized operators. Looking at our growth on a relative basis, we're at the high end of the pack in 2025, but looking out 5 years, while not everyone provides 5-year guidance, for those that do, we're leading the pack by a significant margin, including the seniors. This chart translates that production growth into dollars of revenue. The gold bars represent analyst consensus geos, while the blue anvils represent our guidance ranges for 2025 and 5 years hence. The lines reflect the product of the forecast production in geos multiplied by a range of gold prices to show a sensitivity of revenue to gold price. At current gold prices, our top line revenue will be more than $100 million by the end of the decade. Our SG&A is flat at $7 to $8 million, having come down post-merger integration following our M&A activities in 2021. Furthermore, we have no costs associated with rising gold prices, and so that translates into substantial free cash flow over the 5-year guidance period and beyond. We expect to be debt-free by the end of 2026, and so we will have significant free cash flow to deploy in growing the company and returning capital to shareholders. I certainly don't want to go over all the royalties in our portfolio, but we're cognizant of the fact that interested parties require information on our assets, and so we have published an asset handbook, which can be found on our website. Our portfolio is organic in the sense that many of these assets are moving forward in the very capable hands of some of the world's leading, well-capitalized, and socially responsible gold producers, as noted at the bottom of this page. Our operating partners work to move these assets along the development pipeline. They become increasingly valuable to Gold Royalty, without having to raise any additional capital or incur any additional costs. It's worth emphasizing the significant exploration exposure embedded in our portfolio. over the past 5 years, we've seen an average of approximately 500,000 meters per annum of exploration drilling across the mines and projects that underpin our royalties. And this is not purely on grassroots early-stage assets. Much of this exploration is being conducted on existing operations which are brownfield in nature. The great news here is that we benefit from that exploration upside, much of which is, as I said, leveraging existing infrastructure that's already in place in large-scale operations without us having to spend a single dollar. There are currently 10 assets that will be the key drivers of our low-risk organic growth over the next several years. I won't talk about all 10, but I do want to highlight a few. We have a 2% NSR on Aura Minerals' Borborema mine, which recently achieved commercial production and was developed on time and on budget. Aura is contemplating an expansion to almost double capacity as they move a local road and free up approximately 1.2 million ounces of currently constrained resources that will be included in the mine plan going forward. As we did not include these factors in valuing our initial investment, this represents significant upside to Gold Royalty. At Discovery Metals' Borden asset, where the new owner is planning to upgrade the haulage fleet, improve ground support, and increase ventilation levels, our royalty coverage increases as operations continue at depth, driving additional growth. As I mentioned, DPM invested about $1.5 billion to buy Vares and are in the process of optimizing the mining strategy and ramping up the asset. Vares will be one of the top 10 silver mines in the world with an 18-year mine life and exploration and expansion potential. And we have a stream on all the copper produced from this polymetallic ore body. Canadian Malartic is our largest flagship asset in the portfolio, and we have a 3% NSR with nearly 50% royalty coverage on Odyssey's underground project being developed by Agnico. The ramp-up of production will deliver substantial growth with when the first shaft becomes operational in 2027. There's also potential to add a second shaft, which will help satisfy the quote-unquote fill-the-mill strategy as Canadian Malartic transitions from being an open pit to an underground operation. At the Ren project, operated by Nevada Gold Mines, we have a 1.5% NSR and a 3.5% NPI. NGM is investing more than $500 million on underground development, and the project is expected to reach full production in 2027 with an average annual gold production rate of 140,000 ounces. There is meaningful exploration and expansion potential which could further enhance the value of this asset. Beyond the aforementioned assets, we anticipate additional growth in GEOs from assets such as County Line, Granite Creek, South Railroad, and Tonopah West, as those assets come online during our 5-year guidance horizon and beyond. Scale matters in the royalty and streaming sector. Large cap companies trade at PNAV multiples closer to 2 times and higher, while the mid-tier peers are trading at around 1.5 times. Gold Royalty is trading at a discount to the sector average multiples, and we believe the re-rate opportunity is significant as we emerge from the sub-billion-dollar junior peer group into the mid-tier. Our organic growth alone will catapult Gold Royalty into the mid-cap universe, driving meaningful re-rate potential through a higher multiple. As mentioned, we kicked off the latest round of consolidation, acquiring 3 companies in 2021, eliminating about $10 million in SG&A. Since then, there have been at least 9 additional change of control transactions in the sector, with the 2 most recent being Royal Gold's acquisition of Sandstorm and Triple Flag's acquisition of Origin. There is also Elemental's pending acquisition of EMX, slated to close later this year. Despite the consolidation that has already taken place, there are about 30 publicly traded companies and at least an additional 20 private entities and funds also investing in royalties and streams, given how attractive the business model is. The past 5 years has witnessed an average of about $3 billion in transactions, excluding corporate consolidation, which suggests that there are too many entities seeking to deploy capital in the sector. This factor, coupled with the ability to capture synergies through SG&A, suggests that consolidation will continue and will provide additional impetus for higher valuations. We are attracting leading financiers in the resource sector through our high-quality portfolio, experienced management team, and robust, low-risk growth trajectory. Excuse me. We have strong strategic relationships with the like of Queen's Road Capital and the Australian-based PE firm Taurus, and our institutional shareholder base is expanding. More recently, we noted that Tether filed a 13D highlighting a roughly 10.5% ownership interest in Gold Royalty. We're covered by 7 analysts, all with consensus buy rating and a median target price outlook of $4.75, which is 30% above our current trading level. Our fully diluted market capitalization is approximately $750 million, and we have just over $65 million in debt. Our convertible debentures, which mature in 2028, are callable in December next year and are deeply in the money. In addition, our free cash flow profile will allow us to largely pay down the bank debt, which is about 1/3 drawn under the revolver. As such, we expect to be debt-free by the end of 2026. We're traded on the NYSE American Exchange and enjoy exceptional trading liquidity, with our market capitalization turning every 100 days or less, placing Gold Royalty as among the most liquid companies in our sector. To wrap up, why invest in Gold Royalty? There are compelling reasons to believe Gold Royalty shares will deliver strong returns for our shareholders in this robust environment for gold. We offer exceptional leverage to rising gold prices, with sector-leading growth over the next several years without any capital commitments. We have a quality portfolio underpinned by cornerstone royalties on Tier 1 long-life assets operated by world-class, well-capitalized mining companies. Our 5-year growth outlook is low risk, with over 80% of the assets already built or permitted and located in key low-risk jurisdictions. Our catalyst-rich portfolio offers low cost exposure to gold at an attractive valuation, with consensus target prices approximately 30% above our current trading level. We have royalty and stream interests on assets that have over 100 million ounces on a gold equivalent basis in terms of resources. Our operating partners are investing heavily in our mutual assets, spending on average 500,000 meters of drilling. We have a strong track record of growing our assets from 18 assets to over 250 in less than 5 years. Our board and management team has over 400 years of mining experience, and we have established a strong capital market presence, trading about $10 million a day over the past 3 months. And we have the ideal platform to grow beyond our already peer-leading, low-risk organic growth profile.